All right, let's be honest, filing taxes can be a real headache, right? Especially when the rules are totally new. So today, we're going to demystify one of the biggest financial changes to hit the UAE in a long time, the corporate tax return. So you're probably asking, what is this thing, really? And why all of a sudden is it a mandatory part of doing business here? Well, that's exactly what we're going to break down. Okay, first things first. Let's tackle that big question. Why is this mandatory? Because once you get the why, the how makes a whole lot more sense. So, at its heart, the corporate tax return is basically an annual report card you send to the Federal Tax Authority, or FTA. You're giving them a complete rundown of your business's financial performance so you can figure out your taxable income and, ultimately, what tax you owe. Now, if you only remember one thing from this whole explainer, make it this. Filing is mandatory for every single taxable business. I mean it. It doesn't matter if you made zero profit or if you owe zero tax, you still have to file that return. No ifs, ands, or buts about it. You know, this return isn't just about figuring out a tax bill. It actually does a few really important jobs. Yeah, you're declaring your income, but it's also your chance to claim any reliefs or exemptions you're eligible for. This whole process nails down your final tax liability. And maybe most importantly, it's your official proof that you're playing by the rules and are fully compliant with UAE law. All right, so we've covered the why. Now let's crack this thing open and see what's actually inside the return itself. Look, I know government forms can seem pretty intimidating, but honestly, the best way to think about this one is like you're telling the financial story of your business for the past year. And just like any good story, it's got a clear beginning, a middle, and an end. So the opening chapters of this story, they're super straightforward. Chapter 1 is just who you are, your basic business info. And Chapter 2 is what you earned, a simple summary of your income. And that who you are section is exactly what it sounds like. We're talking basic data collection. The FTA just needs your legal name, your trade license number, your TRN, and of course, which financial year you're talking about. It's all stuff you'll have right at your fingertips. Okay, now we're getting to the main plot of our story, the calculation. This is where we take your regular, everyday business profit and transform it into the final number that the tax is actually based on. And it all kicks off with one number, your net accounting profit. That's it. It's the profit figures straight from your financial statements, before we do any of the special tax math. So how do we get from that starting profit to the final taxable income? It's a clear process. You start with your profit, then you have to add back any expenses that you can't deduct for tax purposes, things like fines, for example. After that, you get to subtract any income that's exempt from tax. You make a couple of other key adjustments, and boom, you've arrived at your final taxable income. And when we talk about that taxable income, there is one magic number you absolutely have to remember. I'm serious, burn this into your brain, 375,000 dirhams. AED 375,000. So why is that number so important? Well, because it's the threshold that separates two tax tiers. It's actually pretty simple. If your taxable income is below 375,000 dirhams, your tax rate is zero, zilch. If it's above that number, you'll pay a 9% tax, but, and this is key, only on the amount that's over the threshold. All right, so the math is done. Now for the really practical part. When and how do you actually get this thing filed? Let's talk about the deadlines. Think of it like this. There's a 9-month clock. The second your business's financial year ends, that clock starts ticking. You have exactly 9 months from that day to get everything prepared and hit submit on your corporate tax return. And trust me, this is a deadline you do not want to miss, because failing to file on time comes with some pretty serious consequences. We're talking administrative penalties and fines, a much higher chance of getting a full audit from the FTA, and you could even face restrictions on doing business with government bodies. Okay, so let's put this all together. How do you stay on top of this? Here's a simple compliance checklist to guide you. Really, staying compliant boils down to a simple 4-step plan. Number 1, record. Keep your accounting records clean and up to date all year long. Number 2, review. Go through and check every single deduction and relief you might be eligible for. 3, adjust. Make sure you understand and correctly apply all those necessary tax adjustments we talked about. And finally, number 4, submit. Get it filed on time through the official Amara tax platform. You know, at the end of the day, the official language is crystal clear. It calls the corporate tax return a comprehensive report and states that all taxable entities must file it annually. There's really no wiggle room there. And that really leaves us with just one final question. We've walked through the why, the what, and the how of this whole thing. So now you've got to ask yourself, is your business truly ready for tax season?